You wake up, check your bank account, and feel a familiar knot in your stomach. Another month of hard work, another paycheck gone. After rent, groceries, gas, and debt payments, there is almost nothing left. You feel completely trapped in the rat race, running faster and faster just to stay in the exact same place. But what if I told you that you don't need a six-figure income to break free? In this video, I will show you the exact zero savings rescue plan to build wealth on a normal salary, even if you are starting from absolute zero today. We are going to skip the generic advice of just buy less coffee. Instead, we will look at the real math of wealth building, diagnose the hidden leaks draining your account, and give you a simple, automated system to turn tiny amounts of money into a massive financial safety net. The system isn't complicated, but it requires you to change how you look at every single dollar. First, we must diagnose the real reason you are stuck. It is not because you don't work hard enough, and it is not just because prices are going up. Most people are trapped by a silent financial disease called lifestyle creep. Think of your bank account like a bucket. Every time you get a raise or a new bonus, the bucket gets bigger. But at the same exact time, new holes are poked in the bottom. You buy a slightly nicer car. You move into a slightly larger apartment. You subscribe to one more streaming service. Without realizing it, your spending expands to meet your new income. You are earning more, but you are not building wealth. You are just running faster on the hedonic treadmill. Traditional finance tells you to budget by tracking every single penny you spend on spreadsheets. But this fails 90% of the time. Why? Because it is exhausting. It forces you to constantly say no to yourself, leading to decision fatigue. Eventually, you burn out, go on a shopping spree, and end up right back where you started. If you want to escape, you need a system that does not rely on willpower. You need a system that plugs the holes in the bucket automatically. Here is the simple cure, the reverse budget. Forget about tracking what you spend. Instead, we are going to focus entirely on what you save and invest before you spend a single dollar. We use the 50-30-20 rule, but with a critical twist. 50% of your income goes to needs, your rent, utilities, basic groceries, and minimum debt payments. These are the things you must pay to survive.
30% goes to wants, dining out, hobbies, and entertainment. This is your guilt-free spending money. The remaining is the most important part. This is your wealth pot. Instead of waiting until the end of the month to save whatever is left over, which is usually zero, you must pay yourself first. The moment your paycheck hits your account, 20% must be automatically moved out. If you make $3,000 a month, that means $600 goes directly into your wealth pot immediately. If 20% feels impossible right now, start with 10%. Start with 5%. The specific number matters less than building the automatic habit. To make this work, you must set up an automatic transfer. If you have to manually move the money every month, you will find an excuse not to do it. You will tell yourself you need that money for something else. But when it is automated, the money vanishes before you even have a chance to think about spending it. You adapt your lifestyle to live on what is left. The friction is completely removed. Now, what do we do with the money in your wealth pot? We do not let it sit in a standard bank savings account. Leaving your money in a traditional bank is like putting it in a leaking vault. It will slowly eat away its purchasing power year after year. Instead, we split your wealth pot into two distinct stages. Before you invest a single dollar in the market, you must save 3 to 6 months of basic living expenses. This money is placed in a high-yield savings account. It must remain liquid, safe, and completely untouched unless an absolute crisis occurs. This is your shield against debt. Once your emergency buffer is full, you move to stage 2, wealth compounding. This is where the magic happens. You do not need to analyze individual stocks or watch the market daily. Instead, you put your money into a low-cost S&P funded index fund. An index fund is a bucket that holds tiny pieces of the 500 largest companies in the United States. When you buy a share of an index fund, you are buying a tiny slice of Apple, Microsoft, Amazon, all at once. Over the last 50 years, the US stock market has returned an average of about 10% per year. Think of it like planting a tree. In the first few years, it looks small and weak, but over time, the growth compounds. 10% per year means approximately every 7 years.
If you automate a monthly investment of just $200 into an index fund, starting at age 25, by the time you retire, that small monthly contribution will have grown into over $1 million. You didn't need a massive salary. You just needed consistency, automation, and time. Imagine your life 5 years from now. If you start this plan today, you no longer feel that knot in your stomach when checking your bank account.
You have a full emergency fund sitting in reserve, meaning a flat tire or a medical bill is a minor, not a financial disaster. More importantly, you have a wealth machine quietly in the background working for you while you sleep. The difference between financial stress and financial freedom is it is the system you put in place. The rat race is designed to keep you spending every dollar you earn.
The only way to win is to opt out of the game and automate your freedom. The question is not whether this system works. The math is undeniable. The only question is whether you will set up your automatic transfer today or continue running on the treadmill. If you are ready to take control of your financial future, subscribe to Peak Capital, turn on notifications, and start building your safety net.
The wealth machine starts with your very next paycheck. Make the switch.